Hey traders, Nick here looking at Twilio. I haven't looked at Twilio since last year. I did a video and I don't remember what I said. So there you go. I am short, am suffering, and I shorted it. When I shorted it in the group, I said, don't do this, I'm making a mistake, but I have a beef to pick with it. By short, I mean very small, limited credit call spread out in time, so I still can be right eventually, but so far the ledger on that trade is red. So I have a biased opinion there. And why did I short it? Just out of the fact, kind of like a screw you kind of a deal, where it's defying logic. I realize and acknowledge its role it will play. I just want to short the price action. So I don't hate the company by any means. In fact, I was one of the original longs in it when it fell to 25 to literally like 25 way back then. I was selling puts into it because that was wrong too. So somewhere in the middle lies the truth. And let's talk levels. Forget what I think or what you think. It doesn't matter. So let's talk charts. This way nobody gets pissed off. But first, let's look at the typical fundamentals, which don't apply here as far as you say, okay, so what's the profitability? It's losing or $2 or $3 a share. Who cares? My problem is this number right here, the price to sales. Is what is the hopium number. So 24 or 25 doesn't sound high. It's super freaking high. Compare that to any of the mega caps. It's more than double of any of the mega caps. So Amazon, I always use it because it's an expensive stock, right? 130 PE. It's only 4, maybe 5 times its sales. This is 24. Facebook is probably 9 times its sales. To give you perspective, Shopify is probably 60. So that's super expensive. The most expensive is Zoom. So it's not cheap. I don't want cheap, but it's not cheap even from the growth perspective. I'm not looking for profitability. I'm looking how much sales do you have hopium into it. You know what that number means? Price to sales. It's the total price of the stock right now relative to its entire year's worth of sales. So basically somebody buying the shares right now is paying 24 years in advance worth of sales, current sales. So if you think it's going to grow that much, that fast, good for you. Amazon grows 30% a year, and it's only charging 4, 5 times its sales, maybe 3.5 its sales. So just, what are you buying? How much growth are you buying? That's the thing. All right, back to the chart. So from this perspective, when it falls into this level, to me, it's falling into support. So if I'm long and I didn't get out, now I wouldn't get out. I want to see how this support handles itself. This is a 1 hour chart. So every candle is 1 hour. I have physical evidence of tails. So they don't want this price down here. So they're going to pop. So then the question is, do I chase? For me, you have to know the candles in your time frame. So at this time frame, they are deciding who wants to be in control of the shares, the stock, and it looks like the bears are taking a hold of it. I'm not saying that you short it. I'm saying that don't buy the pop. So a pop to 212 is not opportunity to start longs there. If I have longs and they got better at 212, I get out, and then I'll buy at the breakout. But it's a gift to get out as it trickles down. If the markets rally, it's going to rally with it. This week, it's binary with the jobs number later the week, so keep that in mind. So the key is to know who's in charge at what time frame. At this time frame, the sellers, not necessarily bears, that could be fans who are profiting. The sellers are in control. So any pop towards the descending trend line is to be sold, in my opinion, until it comes to a point when this behavior meets the bottom of where it has to hold. Then the decision gets made. Lose or break the descending low trend. So that's how I decide whether I stay in my long or not. So if I'm long, I'm not adding on the pops, and I have to make a decision as soon as it tightens into a point if I'm given the opportunity. This could happen overnight. And look at this. Look left. I didn't plan this. Look left. That dotted white line touches the lowest candle right here, and it also touches the lowest candle right there. So tell me this is not a fine point in time, and almost as exactly as this one. So they want to hold it. But if they don't, it starts to look like an inverse cup and handle that has downside. Where would it go next? Okay, so there's an open gap here. The downside target could be here, but I think there are some stopovers along the way. 204 looks like a pivotal level. That would be some sort of support. Just below it, 199.5-ish. This candle will be a little support right there. So the whole zone is supportive. I don't think it's going to go whoosh. If it does, I'll be a happy guy, but I don't need it. I just need the behavior of buying every goddamn dip like it's crack. So that is wrong behavior for a stock. And if the behavior ends, then the super fans will become a little bruised and their conviction will wane, and then normal price action unfolds. But it does have support. So if it falls to here, I don't start shorts down there. This is where I may get out of my trade. If I'm a little green and just tell them, hey, go to wherever you want. I made my point. So this cluster is supportive. This is the target-ish. And this, for this period of time, which is from the 22nd of May, this yellow line is the point of control. So this is where the buyers and the sellers were most active. So all this up here, relative to this whole period of time, has not matured enough to matter a lot. So it's falling back into what they call the value area, where a lot of the action happened. So if you don't know what that means, reach out. It's the volume profile study of the charts, and it's super important. So if I have one thing to chart, would be eyeballs, levels. That's the one tool that I don't really need tools for it. Your eyeballs, just look left, like I just pointed out, that one candle, just look left. The other thing that is secondary, almost as important, are the volume profile, because they say price is truth for one reason and one reason only. Whatever happened before is going to matter going forward. If you say machines are trading, that's what machines use, data. They don't use emotions. Oh, I think somebody upgraded, I'm going to do this. No, they look back on the chart. What happened last time you were here? Then decide. Period, end of story. So get the emotions out of there, trade the chart. Know what levels mean something. Candles don't mean anything unless they break particular levels. So this big red candle, what is it down today? 5%? Doesn't mean a lot if the bottom holds. All it means is that people got shook out, and or you got an opportunity to get long if it really is the support. So I don't trade based on feeling. We will always make mistakes. I would trade based on levels. Ticks that matter come at levels that matter. The rest just don't matter at all. All right, Nick signing out. I'm pretty sure I'm going to piss off somebody by making this video, but I really am agnostic. I don't hate the company at all. I hate the price action. So let me show you what I hate. That candle in 1 month is not right by any means. Look through all the charts anywhere on Wall Street. You would see very few of these that make sense and or that hold. All right, so I forgot to show you one thing. What were we on? 1 hour? Okay, so I take notes and I draw lines. So here are the lines that I shared with the members. There's a link down below if you wanted to join the group. It's not free, but it's dirt cheap. So anyway, these lines mattered, and now they're fighting over them. This line mattered, and it's the support I just mentioned. Where it is right now, look left. What do I have? It used to be one of my upside targets from the breakout down here. So I expected the breakout from here to yield an upside to from 197, let's call it 198, to get to 210-ish. It did that right here, and then it overshot. That's why I'm upset with it. Not upset, but I'm surprised by it. But then when it falls back to it, it's not a place to exit, because that's the platform from which they sprang. It's okay to test it for footing and hold if you can, so you can build higher prices. That's normal price action. Okay, so that's why I say it's not time to leave. But if that fails, then I expect down another stronghold here. Okay, this was footing too, so let's test that for footing. So the closer you get to here, the footing gets better because the volume gets better from the volume profile. The ledge is a lot stronger here than here than here. It's frothy, okay, super strong on this time frame. Nick signing out.